Why is India replacing the Income Tax Act 1961 after more than 60 years of its enforcement? Was it so outdated and complex that a whole new law is now required? And how is this going to impact the common man of this country? The Income Tax Bill 2025 promises simplicity and clarity, but will it truly contribute to the growth of the economy, create jobs, and make filing taxes easier? Or is it just another reform on the paper? And what were the recommendations made by the parliamentary committee on this bill before it became a law? Let's find out. Hello students, in this video let's discuss about one of the most important developments in India in recent time, the 60-year-old law of related to income tax is being replaced with a new law. So it is extremely important generally, otherwise it is more important for a competitive exam. Be it UPSC, state PSCs, there'll be questions on it. You should know about the background, right from what comes under income tax, when was it introduced in India. Do you know that India celebrates an income tax day? When did digitalization start in income tax? Which type of tax is it? Meaning, if it falls under which category? It falls under a category where the center levies it, collects it, but it has to share with the states on the basis of the recommendations of the Finance Commission. So, all these points become very important. In this video, I'm going to basically tell you about the new law, historical timeline of income tax, the abbreviation of simple. The finance minister has been categorically saying that the purpose of the new law is to make it simple. So, what does simple stand for, and what is its relevance? Then, what are the differences between the 1961 law and the 2025 law? What are the key changes? What does this law mean for for common man? When this bill was introduced in the parliament, it was referred to a select committee. So, what did the select committee have to say about the bill? What will be the impact and future implications? This is what we are going to discuss in this video. To begin with, this bill has been passed by the Lok Sabha on August 11, 2025, and then it was actually initially referred to Parliament Select Committee. This is very important. It is going to come into effect from 1st April 2026. This bill aims to simplify the tax structure, reduce litigation, and make compliance easier for taxpayers and businesses. Now, the bill reduces the 1961 law nearly by 50%. Now, what do we mean by that? But before that, the historical timeline, please remember. In 1860, income tax was introduced by Sir James Wilson, and 1992, the first Comprehensive Income Tax Act was enacted. Central Board of Revenue Act constituted in 1924. 1961, the recently replaced law has come into existence. Computerization started in 1981. Central Processing Center was started in 2009. The new national website of income tax was launched in 2014, a very important scheme for settling tax disputes. Vivad Se Vishwas was started in 2020, and from 2021 onwards, we have a separate e-filing portal. And as I said in the beginning, please remember Income Tax Day is observed on 24th July every year because on this day in 1860, Sir James Wilson introduced income tax in India. Now, moving forward, as I said, the aim of the bill is simple. What do we mean by simple? Streamlined structure and language. The language has been simplified, the number of provisions have been reduced, so integrated and concise, minimized litigation. Wherever there is a scope for dispute, the scope of dispute has been reduced to a large extent. Practical and transparent, learn and adapt efficient tax reforms. This is the full form of simple. Don't be surprised if they simply ask you the full form of this abbreviation in your competitive exams. Now, Income Tax 2025 aims to simplify Income Tax Act 1961. How? In the original, in 1961 Act, we had 47 chapters. Here we have only 23. Sections here were 819. Here it is 536. Words 512. Here it is 2.60. This this factual information is extremely important for competitive exams. They can ask you these points. So please ensure that you remember these facts well. Apart from that, you should also know that Schedule 2 deals with income exemption. Schedule 3, persons eligible for exemption on certain income, such as partners of firms and Hindu undivided families, then exemptions for non residents. Schedule 5 deals with exemptions to business trusts, sovereign wealth funds. Schedule 6 deals with IFSC units, and Schedule 7 deals with persons exempted from income tax. Now, moving forward, this is a small table which compares both the laws, the 1961 and the 2025 Act. This was the main taxation law, income tax law in India since 1962. Now, this is being replaced by this. Tax slabs were more here and there were lower exemption limits. Here, you have simplified tax slabs and higher exemption limits. Here, the exemption limit was about 2.5 to 3 lakhs. Here, it is 4 lakhs and above. Now, rebate available for low income, smaller amount, stronger rebate, higher income also covered. Deductions, many deductions for investments and expenses. Here, the deductions have been limited. Default regime, old structure was the default. New system is default, old system is only on request. See, here basically what will come into existence, only the old law will no longer be in existence. The new law will come into existence. Complexity, this was very, very complex because it had too many sections and too many provisions. But here it had limited sections. And then what was the focus of the law? The focus of the law is revenue collection and broad coverage. The focus of this law is simplification and tax relief. So, what is the benefit for common man? Simplification and tax relief. Now, moving forward, what are the key changes? Please remember, refunds for late filers. Earlier, late filers would not get refunds. Now, they would get no penalty for late TDS filing. Nil TDS certificate will also be given. Instead of talking about a financial year or an assessment year, they are talking about a tax year from here on. Pension tax benefit, tax deduction allowed for one time or commuted pension payments, especially for pension from LIC and similar funds. Company dividend benefit, companies can deduct intercorporate dividends to avoid double taxation. So it is simplifying the taxation system. It is going to reduce the burden on taxpayers. Property income rules, 30% standard deduction will be there on income from property. However, clear rules for valuing empty rental properties have also been laid out. Now, old rules removed. A lot of old rules which are no longer in existence have been removed. Moving forward, this is was taxed at and will be taxed at. Earlier, this is how the taxation was 5%, 20%, and 30%. Now it is going to be 5, 10, 15, 20, 25, 30. Then, what is the benefit? What it means to a common man? It is as simple as you will be able to understand how to file your income tax. You'll know how much tax you are liable to pay. The tax that you're supposed to pay is also reduced. So, if I have to sum it in 2 points, I will just say one, it is simple, and two, it talks about a reduced burden. If you read this para, you'll understand the same thing. Moving forward, income tax budget of 2025, what it means to common man. Now, these are the slabs that we have just seen. Tax rebate now for incomes up to 12 lakh. Increased standard deduction, rising of standard deduction from 50,000 to 75,000, higher cap on home interest deduction, encourages first time house ownership, simplified tax compliance, higher exemption limits, and easier GST procedures. And gold loans are being encouraged in the budget. Parliamentary Select Committee, who headed it is important. It was headed by BJP MP Vijayanath Panda, and it made 285 recommendations, most of which have been accepted in the revised bill. Key recommendations included, it said there should be a clear definition for terms like capital assessment, micro and small enterprises, beneficial owner. The committee suggested addressing ambiguities around income from property including standard deduction and pre-construction rate on home loans. So, what should be the pre-construction rate, post-construction rate? Recommendations focused on aligning tax treatment for pension contributors and scientific research expenditures. So, basically, it has tried to address the probable grievances and liabilities of all types of income payers, like what about pensioners? What about people who are trying, middle class, who is trying to buy a house? What about people who have low income rates? The committee emphasized the need to strengthen cross referring across provisions to improve clarity and reduce litigation. Now, what will be the impact? This is again related to the one formula that they talked about, simple. It is going to reduce litigation. It is going to make compliance following the rules easy. It is going to give a clear picture on business, and it is going to promote economic growth. How? When you have easier taxation system, it will promote economic growth. Easier taxation system, you will be more willing to pay taxes. So automatically these taxes will be used for economic growth. So that is how economic growth is related to taxes. Undoubtedly, the bill is extremely important and it will have a far reaching effect. The key provisions, right from the full form of simple to relief for tax refunds, no penalties, nil TDS certificates, replacement of assessment here with tax here. These points are going to be extremely important for your exam. Who headed the Parliamentary Select Committee on the bill is also very important. And finally, when is the bill going to come into effect? It is going to come into effect from April 1st. That is important. Thank you.